Hello, everybody. Kirk Spano, August 18th, Investing 2020s. And we're going to cover the broad market really quickly here, then finish off with a stock that I think you probably all should own if you have any type of speculative growth space in your portfolio. So first off, you don't see me with a lot of 1-hour charts. I wanted to get the tops and bottoms here right to the money. So the stock market's high point in the past year is 479, actually an all-time high. And it corrected down to 362 and change. The recovery has been over half of the loss. So you see the Fibonacci lines I put in. Here's your 0.5, this dark pink line. We've gotten through a 50% retracement to the upside from the correction. So from here to here, we've recovered half and a bit more. Now there's a number of resistance levels coming up. 0.618 if you're using Fibonacci's. You have GAN levels coming up, and then 0.786, and then a potential breakout above the most recent highs. Because we have gone through the 0.5, it is extremely unlikely that we set new lows. Now, there's been exceptions, but typically not on corrections of this size. So this recovery of more than half of what we lost indicates that we probably wouldn't set new lows unless there's a black swan or something that's very, very unusual in the way that the Federal Reserve behaves. Not that they can't do unusual things, not that they can't make mistakes, but it would be typically out of the ordinary that they would allow this to set a new low if they haven't done anything already to prevent this rally. Interestingly, the rally has occurred under certain circumstances that I think make history a little less telling than it has been in the past. So I'm not putting it out of the realm of possibility that we set new lows. I'm just telling you what the past has typically done. Here's the thing. In the last 40 years, we haven't had inflation, and that is a wild card. So the fact that we have inflation means that the Fed could, in fact, push hard enough on inflation with higher rates and quantitative tightening on the balance sheet that we would, in fact, set new lows. My original projection that we get close to 300, 320-ish being the number that I kept coming back to, I think is still very possible. But because of what history says, and because I do think that the Fed will pause sometime later this year, a retest of the bottom in the 360s and 370s means that you're going to need to become very active on the buying side on large caps at that point, if large caps are a thing that you do much of. I like the small and the mid caps. I still think that's where the value and the growth are, both cases. But down in here, I'd have to refill my large cap allocation. And I think that you would have to as well by reducing your cash holdings to probably around 10 or 12% from 20, 30, 40, which is where a lot of people currently are. Interesting image from FS Insights, Tom Lee's firm, Fundstrat. Market breadth is at an all-time high, all time. Take a look at this line for all-time market breadth history. Take a look at the stock market. Interesting how these shadows move, right? This is really a shadow of this. If they would go back even further, you would see that this really follows going back all the way to about 1994. When we take a look at the overbought signals, as I've told you for the last few weeks, there wasn't much that was overbought. Here is the daily RSI. You're starting to see on the daily a lot of overbought. Taking a look at the Russell 1000 now, which is the biggest 1,000 stocks on the stock market. So it's the entire S&P 500 and another 500 stocks. Remember, some of the big stocks aren't on the S&P because they aren't profitable. A lot of companies that overbought and many, many more that are close. It's on the daily. Let's switch to the weekly. Let's go to the weekly. This is way more than what it was a while back. And I think we had 4 overbought stocks a couple of weeks ago, up to about a dozen. But then you see on the weekly, a lot more, again, that are close to overbought. So if the daily overbought signals get higher and higher, right, that means that market breadth continues to go up. Does look like it's flattening out. I mean, almost everything has rallied. As these daily numbers go up, they push the weekly numbers up. So we are probably within 2 weeks, maybe 3, of having a lot more stocks that are overvalued. And that would mean that the S&P 500 is overvalued. That would mean that this RSI here gets back up to here. And what do we know about that? Every time the S&P 500 RSI gets up here, it's time for a correction, or very close to time for a correction. So I think this all jives with what I've told you. So I think that we rally until maybe the first week of September. And then we start to get some pessimism going into the Fed meeting. Now, what the Fed does in September, hard to know. But if you believe that the Fed is a political animal answering to its current president, I still think that what the Fed probably does is raise a half a point and then say we're getting very close to being done. Maybe we are done, maybe we're close. So I think while they raise a half a point, they try to color it as dovishly as possible. How will the market take that? Well, I think the market will take that pretty positively. We'll see. What we know is that the put to call ratio has been coming down, especially during this rally. And if it gets much further down, again, we would need at least a few weeks of correction. We know that margin has shot up since COVID, market breadth. So if this comes down, stock market will come down just like it always does. Put to call ratio is getting low, and margin is at an all-time high again, even higher than 2008. And this period here, where we got a dose of quantitative tightening, not nearly as big a dose as we're getting now, that caused the market to chop and then fall. But the apes came in, your Reddit people, your young investors, had a couple bucks to invest, and they used margin to get more. It wouldn't be unusual to see margin fall off a cliff with some sort of correction. 2000, 2008. You had a correction going into 2012, and we had the flat market of 2015 and 16. It wouldn't be weird to see margin come way down, for sure to this level, and the stock market would follow. So I think we're in a pretty precarious time. Maybe that's why American Tower owns 4.8% of AST Space Mobile. American Tower is a $130 billion company with $10 billion in revenues to REIT, so they avoid a lot of taxes that way. But it's a company that, because it's so big, its growth rates slow down. In fact, in the United States, their growth rate is barely 1%. Their higher growth rates are in other countries. So American Tower and Rakuten, a couple other companies, are all big owners of AST Space Mobile. Why? It's because, in theory, the technology works to have a satellite beam 4 and 5G to a cell phone. Now, it already works in reverse. The same thing that they're going to do with these satellites is what they already do with big satellite dishes on the ground. You line up a bunch of satellite dishes, you keep them in phase, and it acts like one giant satellite. And you can work it in reverse. Now, my guess is there's going to be a lot of tinkering once they have launched their test satellite next month, presuming the weather holds and nothing happens between now and then. But the satellite's been tested. It's complete. It's at Cape Canaveral waiting for a SpaceX launch. It wouldn't be unusual for that satellite to get up, to be working, and then for them to find out that, we got to make some adjustments to get it to work just right. And then however long those adjustments take, it takes. But at this point, AST Space Mobile is on pace by the end of next year, or probably the first half of 2024, to have enough satellites over the equator or near the equator to serve about 2 billion people, which roughly overlaps with a lot of American Tower's current coverage, as well as the giant gaps that they have. By 2025, AST Space Mobile will basically be covering the entire planet, including the oceans. How would it be to have a cell phone that worked from a cruise ship or an airplane? The airplane one just amazes me. Sending a signal from space that you can use on an airplane going 500 or 600 miles an hour. I mean, that's amazing. So why is AST Space Mobile so interesting to me? We've been investing in it for about a year. Most of us have a cost basis around 7-ish, depending on how many puts you sold and how much you added on a month or two ago when it was down around $7 a share. We even sold calls one time and made some money on that. Why is it so interesting? American Tower, at $10 billion a year of revenue, has a market cap of $130 billion. AST Space Mobile has potential revenues of $20 to $30 billion by about 2026 or 7. They're currently at $2.5 billion in market cap. Let's say they only get to $10 billion in revenue. They should at least be worth close to what American Tower is worth, shouldn't they? American Tower has a PE of 40, which is really weird for a REIT. So let's cut that in half. Let's suppose AST Space Mobile only gets to $10 billion in revenue and only has a PE of 20. Still a $65 billion company, or about 30 times bigger than it is now in its pre-revenue state, where the technology still has a little bit of doubt. And the technology is not going to fail. It's just going to need tinkering. They're going to get this up there. They're going to say, okay, this works. This should work better. and they'll fix whatever this should be work better thing is. So if you have speculative growth room in your portfolio, I think you should have some of this. Now, Hennessy funds identified a lot of these things a year ago, and they put 1% of their money into this company. It's a pretty big commitment for them, but they're at 1% because they know they can make 30 times their money potentially, and it's not a very big risk, only risking 1%. I think for a conservative investor who does try to sprinkle a little growth in, yeah, 1% position is probably pretty good. If you're secure enough that you can go to 2%, then go to 2%. If you're young and still investing money because you have a paycheck, I think 3 to 4% is a standard full position. I think you could do that here. Why? Not because you're putting odds on everything working, but because you're saying if it does work, it's a 30 bagger. It might be a 100 bagger if they do get to that 20 or 30 billion in revenue, which I think is very doable based on the number of people who use cell phones. So let's take a look at a couple things. First off, this whole area across the equator, look at all the gray. These are a lot of places that don't have good cell coverage. Imagine being able to get 4G or 5G from space in places that don't currently have 4G or 5G. It's a lot of people. And we have to remember, and I forget this all the time, is that 4G is going to run through around 2030. That means that the later generations of satellites from AST SpaceMobile probably can be pre-configured to do 5G and 6G. 6G is coming in the 2030s. So the later satellites could be pretty interesting. I want to show you some revenue numbers from AMT that make you start thinking about. I can't find it right now. I had a chart and I closed it on accident. So by 2025, there's going to be about 7 billion people with cell phones. And about half of them don't have cell tower coverage. In the United States, that's different. In the United States, about 95% of people in cities have cell coverage, which I believe makes that around 80% of the total population, right? About 4 out of 5 people in the United States live around a city. But the rest of the world is kind of the opposite. They don't live in cities. That makes cell towers very inefficient, other than along the highways, which in the rest of the world, again, not the same type of huge integrated highway system that the United States was smart enough to build in the 1950s. They just have a few main roads. That's why if you ever travel internationally, you can run into some pretty big traffic jams because there aren't a lot of alternate routes. But those are really the only places that towers will go, is along the highways and the main routes and in the cities. So in more agrarian societies or places where you're not going to have a giant city, AST SpaceMobile will be the primary source of 4G or 5G. You're looking at potentially twice as many people on 4G and 5G by 2025 or 2026. It's kind of interesting that that coincides with the EVs, right? A lot of things technologically that we talked about back in 2020, and even in a few years leading up to 2020, but 2020 is when we really pivoted towards this fourth industrial revolution idea. 2025, 26, 27, a lot of things are going to take hold. And between now and then, these corrections, these periods when the rest of the public doesn't understand something, are times to get in. So this article I'm going to write over the weekend. It's going to be my Stocks of the Week article for next week, along with an energy piece. Then I'm actually going to put this on the free side of Seeking Alpha after I lay everything out. You need to find a way in the AST SpaceMobile pretty quick because this stock has a 25% short interest. It is impossible to borrow shares. The interest rate for borrowing shares is going up. There could be a massive short squeeze on this stock going into the launch, and especially if they report no major problems with the technology. If it's just the minor stuff that I expect. I think this stock can run to 30 pretty quick on a squeeze. The warrants get in the money at 18, and that actually would help the company quite a bit. So as this stock goes up, it's going to gain momentum. And it could get one of those really funny shapes, in which case, we right size, on that huge momentum to the upside. But not too right, especially if you don't want to buy it back when it comes down. If it's going to scare you to try to buy it back when it drops after a spike up, well, then you just ignore it and you come back in 2025. So all these things are playing together. A lot of different stories and a lot of different stocks. The energy stocks are looking super interesting to me. Everybody's got the oil story wrong. Everything is priced into the oil stocks right now, except carbon capture and conventional versus unconventional reserves. Nobody even talks about that. I look at the articles Nobody even talks about that. Fracking, it just isn't terribly economical as costs go up. But conventional wells, price of oil is in that $60 to $80 range long term. Conventional wells that you don't have to spend much money on because they're already there and just dripping out oil, like Occidental has. Pretty valuable. Then all those empty caverns they have and their expertise in carbon flooding, it's a pretty interesting story. That's why I've told you, if you can buy Occidental below Warren Buffett's warrant price, which is 59 and change, like we did a month ago, 6 weeks ago, we bought a little bit of that. You're gonna be pretty well rewarded because you're gonna end up with Berkshire shares, I think. In any case, I don't know what the Fed's gonna do in September. I suspect it's raise 50 basis points, but try to be dovish about it. Probably get a little rally for the next couple of weeks, but we're maxing out on market breadth, margin, and the put to call ratio is heading down pretty quick. So that means that we could get a little correction in September, and whether it continues into October and November, we'll see. I still like the whole double bottom idea. I've been talking about that for months, but if there's an energy shock because of something Russia does or Saudi Arabia does, or something bad happens in China with their economy, which we've gotten hints of, these broadening patterns that we've talked about with the charts leave us open to some very bad things. But you have to plan for the long term. We know the long term is always better. So if the value's in small caps and mid caps right now, because they have the growth and now the tax code is more on their side, focus there, and we'll figure out when to buy large caps when the time comes. But I want you to think about this stock and how much of it you should have. I think you should have some. And I think American Tower, it's chronically expensive, but if we can get it on a correction, you probably want American Tower too. All right, take care.